Okay, back for another Cardano ADA video, and in today's video we're going to be talking about the price action of ADA, what we think is going on, where we think things are heading, and all that wonderful stuff. As I get into the video, if you find things useful, informative, smash that like button. I do appreciate that. If you happen to be new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so you will be kept up to date with absolutely everything that we do here at Cheeky Crypto. If you haven't yet joined us in Discord, guys, check it out. Link is in the description below. Let's jump right down into this video then. So here we have ADA paired up with USDT. We're on the 𝗕𝗘𝗪𝗔𝗥𝗘 spot exchange and the 1 hour time frame. And as you can kind of see, we saw a bit of a move to the upside and then an almighty crash over here. This happened at Friday at 2 p.m. That's basically UK time, UTC +1. So what's interesting about this is there was a lot of interesting kind of movements up here. So we moved up about 15%, and then of course we have this kind of crash to the downside at 10.6%, and then of course we start to recover up from here. Now, what's really interesting about all of these things is, well, we filled out the fair value gaps. You can see we had one here. This being 28.1 to 28.7, then the second one here, this was 27.3 to 27.7, and the one right down at the bottom here, 26.1 to 26.4. Let's go over to 𝗕𝗘𝗪𝗔𝗥𝗘. Let's just show you what this looks like. Let's come over to our little search button, and we're going to go into ADA USDT, and we're going to bring this up, and you can see that we hit all of these on the way to the downside here, right? So what fair value gaps remain are a little bit lower in the price chart. Okay, we can see those here, but what was really interesting is that all the fair value gaps so far were hit, and then we reversed up. Then we come down, we grab any of the other fair value gaps that were present, and then we move back to the upside. So for those who are unfamiliar, fair value gaps are created from imbalances in the order books. They represent areas in price where there was no liquidity. I say no liquidity loosely. It's more like there's very little liquidity. And essentially what it means is large orders came in and they couldn't be filled at the current prices. So the price had to move to where, let's say, the sellers were in order for those buy orders to get filled, right? And you create gaps in price. Now, these gaps that get created, price wants to go back down and fill it, i.e., the market likes to put liquidity back in where liquidity wasn't. Okay, so you can see here we left all these gaps on the way up, and then you come back down and you fill them all back out again. You put liquidity back in to the market. Okay, so when we see these things, and we can kind of see, obviously analyze the order books, we can kind of spot them a little bit ahead of time. It's not really overly important that we spot them ahead of time. However, it's more important that we can identify them on the price chart so that we can then be predictive over where we think price is likely to gravitate back down towards. Now, there are two gaps that were left on here, 24.3 to 24.7. We have the higher one here at 25 to 25.3, right? We haven't been filled out yet. And the key word there is yet. Okay, now it's possible that we continue this move to the upside. I just don't think that's likely to occur. I think actually we have a more of a move to the downside. So, you know, it's going to be one of those things. We're going to jump down into the trading view charts in a second, but before I do, if you haven't yet signed up to 𝗕𝗘𝗪𝗔𝗥𝗘, why not check it out? Affiliate link is in the description down below. It's a fantastic platform. I use it for all of my leverage-based trading, whether I'm leverage trading Bitcoin, Cardano, VeChain. I use 𝗕𝗘𝗪𝗔𝗥𝗘 to do that. I also use it for about 90 to 95% of all my spot orders as well. They have so many different cryptocurrencies. It pretty much has everything that I'm looking for. They are the occasional coins and tokens that I cannot get on 𝗕𝗘𝗪𝗔𝗥𝗘, but for the most part, it has become my kind of go-to platform. So if you are looking for a new exchange, you're kind of wanting to make sure you have exposure to as many as possible just in case something happens to your most favorite exchanges, then why not sign up to 𝗕𝗘𝗪𝗔𝗥𝗘? The affiliate link is in the description below, and if you do use that link, you will get up to $8,000 of deposit rewards. So depending on how much you deposit to the platform and how much you trade, you can earn a nice healthy reward for signing up to 𝗕𝗘𝗪𝗔𝗥𝗘. So why not check that out in the affiliate link in the description below. Now, if you do also use that link, you can join us in Discord, where we run our trading competitions for our basically our 𝗕𝗘𝗪𝗔𝗥𝗘 users. So again, there's fantastic rewards to be earned down in our Discord server through the 𝗕𝗘𝗪𝗔𝗥𝗘 link as well. So why not check it out? Link in the description below. Let's jump back down into the charts, right? So as we can kind of see, right, we filled out the fair value gaps and we started to move back to the upside. Healthy correction, and then we're starting to kind of see this push back up. Now, as I said, it's still possible that we push up a tiny bit further up here. Let's jump down into our chart over this side, right? So our Elliott wave theory chart, we can see that we had a three-wave move to the downside, and it's possible possible here that we actually look at this thing as also a potential three-wave move to the upside. However, that's not really where I sit on this one. I think we potentially have a much bigger impulsive structure forming, and for that to really kind of play out, we need to come down lower than our 1 hour time frame. What we're going to do is we're going to come down to a 15-minute, and we're going to analyze that here, right? So this is the particular drop in question. Okay, so this particular drop right in here, let me just adjust this so we can see it. It comes in at some interesting points, right? We have this level, and then we bounced up to here, and then we drop all the way down lower than 4.236, right? Really deep retracement. But you can also see that we have a wick right here. And if I just go ahead and just bring that out a little bit, you can see right there on that little low area, just down here. And we had this little move up here. You can see that we also came down lower than the 2.618. Typically, we would have expected this to end on the 1.618 or between 1.236 and 1.618. But nonetheless, it meets our requirement to kind of think of this as an impulsive movement, which basically means we look at it as a wave 1, wave 2, wave 3, wave 4, wave 5. Now that's important. That's important for a few different things, right? One, it could be a part of an irregular flat correction, right? A running flat correction is what it could be. That would be articulated like this, where we see an A wave coming down, a B wave going up, and a C wave coming down like this. That would be an irregular flat correction. However, we know that that wouldn't make sense because we have an ABC structure coming down here, and you can't double up your wave counts like that. So that doesn't look like it's what's going on. And instead, I think what's going on is you have a 3-wave move up, and then you have this 5-wave move down, which means we're starting a 5-wave move to the downside. Let's go back to our hourly, right? So if that's a 5-wave structured move to the downside, right, after 3 waves down and 3 waves up, well, we're bouncing up in a 3-wave fashion, and the expectation will be another 5-wave move to the downside. Now, if I'm right about this, we cannot cross any higher than the high of our origin, being 29.97. If we go up higher, then I'm wrong, okay? That's essentially what I'm saying here. My wave counts, to be correct, we'd have to stay below 29.97 cent. So it gives us a kind of hard and fast rule. So if I was to trade this thing, looking at the fact that we're overbought on our daily, our 8-hour, our 4-hour time frames, if I were to try to trade ADA here, what would be my move? Well, I'd be looking at shorting the market, and I'd be putting my stop loss at 30 cent flat. Okay, because that would be the invalidation. And I'd be looking at my take profit lower than my wave 5. My wave 5 at the moment comes all the way down here at 26.72. And so we're looking at a really good risk-reward ratio on a potential short trade for Cardano. Okay, now if I get time, I'll probably investigate this further for the Discord and the Patreon member, or not Patreon members anymore, our cheeky members. And I'll investigate it further as to whether or not this is something I will personally do. It already depends on whether I have time to do it. But if I were to investigate this further, this is the play that I think is currently something to be investigated, in my opinion. So it'd be interesting to kind of see how this one plays out overall. But for the most part, I'm expecting this to be a pretty significant move to the downside. Now, I mentioned it being impulsive and the start of a big impulsive movement. And in order for that to kind of be the case, we'll be looking at us moving down. Let's just hypothetically say we've already reached our peak here. We'll be looking at moving this down probably to 24.63 cent. And it should be a big 5-wave drop, 1, 2, 3, 4, 5, like this, right? And then we've got ourselves a situation where we have a wave 1, wave 2, wave 3. We'll come up for 4, we'll go down to 5. And all of that is very important because when I come up to my daily time frame, we're looking for a big 5-wave impulsive movement to take us down to 18.01 to 20.36 cent. Okay, so overall, if we were to kind of like zoom right out, what's going on here? Well, we can see ourselves with a potential wave 1, 2, 3, 4, and 5 here for Cardano ADA. And as such, we're expecting a 5th wave movement. The 5th wave movement may not be impulsive, it can be diagonal based, but for the most part, our expectations are a new lower low for Cardano ADA, and the path of how we get there could be starting to be mapped out right within this little structure that we've started to see here going on, right? So with this little 5-wave move, that could be the very beginning of our wave 3 situation, and that might be a wave 3 of a wave 3, for example. So we could be nesting down into quite a few different kind of levels, but it's interesting nonetheless to see the next kind of day to 2 days worth of data for Cardano and how whether this is going to play out. Okay, it could play out exactly as I've articulated. We kind of have ourselves a kind of cutoff point at 29.97 to say that that's not what's going on. At some point though, I think we have to move down into that daily low. So if we're kind of swing trading on the daily, then we are looking at maybe our stop loss being a little bit higher. But for the most part, you know, I guess if we really wanted to kind of give ourselves the most amount of safety, we're talking about being above 34.85. But nonetheless, you know, that's too much of a risk to be shorting the market at this point here. But nonetheless, you know, I think for the most part, that's where I think the ADA is heading. We've got these scoped out for these low points, and I think that is something that is truly possible here for Cardano's ADA. Let me know what your thoughts are in the comments below. I think I'll leave this video there for today. Wait for some more data to come in and then update you again in the next day or so. If you found it useful, smash the like button. If you're new, subscribe, and guys, I'll catch you all in the next one.
We are not financial advisors. None of what we have communicated verbally or in writing here should be considered as financial advice. It is not. Do your own research before investing in any digital asset or affiliate offers, and understand that investing in any crypto is risky. If you do, you need to be prepared to lose your entire investment. This video is for information and entertainment purposes only. All our videos are strictly personal opinions. Please make sure you do your own research and never take our opinions for financial guidance. There are multiple strategies, and not all strategies fit all people. Our videos are not financial advice.